I'm excited to be here with you guys all today, especially Monetsupply. I think you were Tally's first employee. I think I've heard.
Bringing me back. Yes, yes,
Yeah.
indeed.
Okay, sick. Yeah, it's good to talk to you in person finally. For our listeners, I also work at Tally, the on-chain gov platform where Monet Supply was the first employee. I think you left before I ever got there, but a bit of lore. The crypto community runs small. Maybe we'll get started here. It seems like people joining up. And people probably will down the line too. So we'll make the most of the time. I think this space will probably last for about 40 to 50 minutes. We'll shoot for. But yeah, let's get started. So Moonwell Radio, we've hosted 3 episodes thus far, all about in the last maybe 8 months or so. We're talking feature releases on Moonwell, educating the community about the latest in DeFi and on-chain finance, which I think is a really cool sort of outreach that Moonwell does. And then in doing so, we talk about how Moonwell collaborates with these protocols developing the latest in on-chain finance. So we've done an episode with Base, Rainmaker, and Circle thus far. And now we're going to get into Morpho, Base, blockchain Analytica, and the new on-chain economy. So let's do it. I'm Cool Horse Girl, or CSG, if that's easier ever. I'm a delegate at Moonwell, and then I also work in governance across the space. But yeah, welcome, you three. It's really great to have you guys here. I'll ask you guys each to do like a quick introduction on maybe like a one-liner on what the protocol does and what you do and why you're here today. Maybe I'll kick it off with you, Merlin, if you want to start.
Yeah, sure. So thank you for having me today. So I'm Merlin, one of the co-founder of Morpho. So I'm a head of integration, so basically a team supporting every integrators of the Morpho protocol. And the one-liner of Morpho is we are building a lending primitive lending protocol where anyone can create any market and lend, borrow any asset, ERC20 tokens like you can think of. That's it. Just one line. So I guess like next one is Luke or Madet. I don't know.
Yeah, popcorn style. Maybe Luke, you want to.
Sure. Thanks for hosting, Cool Horse Girl. It's great to be here. Um, yeah, so I'm a founding contributor to Moonwell. Moonwell is an open lending application on Base. We just launched on Optimism as well yesterday. We're on a couple other networks, and we're all about bringing powerful on-chain finance tools to everyone, regardless of where you live or what your ability level is. And so the Moonwell application allows you to simply supply or borrow digital assets and gives basically everyone that's on chain the ability to do really great things with the digital assets they already have. Borrow against them, lend them out, etc. So it's really exciting to be here and talk to you a little bit about on-chain finance. Thanks.
All right, and I can pop in. I'm Monetsupply. I'm a senior risk analyst at Block Analytica. And Block Analytica, we specialize in risk intelligence for DeFi. Risk consulting for protocols, offering certain analytics tools, including we have a great dashboard for Morpho and Base, and also risk curation. So this is kind of a new business line that we're going into, but basically curating risk for vaults like what we have with Moonwell on Morpho.
Super cool. I'm keen to see how we're all working together. We're also going to be joined probably at about the 30-minute mark, so in maybe 22 minutes, by Jesse Pollak, who's the head of protocols at Coinbase, base builder number 001. Those zeros are important. So we'll have him join too about halfway through and just plug in But maybe let's kick it off. So I think how we'll structure this is I want to get like the more robust intro on Morpho Blue, Base, Moonwell, and Block Analytica, and then we'll kind of go into um, how you guys are growing each of these places. We know that it's a big goal of Base, obviously, to bring a billion users, as well as goals of each of our organizations individually. And then finally, we'll sort of dive in deeper about what the future looks like and how the sort of four places are working together to drive this future. So I'm going to start. I have questions like specifically aimed at each of you guys and your protocols, but also feel free to jump in on one another's. It's pretty helpful and cool when that happens. So maybe I'll kick it off with Merlin. High level, what is Morpho Blue? And then how's it different from existing lending protocols? I think those of us who have been around for a while, right, are obviously like lending protocol. They're thinking, oh, maybe that's Aave or Compound. What's that look like? I also want to break down especially the permissionless nature of Morpho Blue, which is cool because it's in line with the like OG crypto ethos. So yeah, love to hear it.
Yeah, right. So Morpho Blue, you can see that as like the most simplest lending protocol that you can think of. Basically, it does one thing. It's like lending and borrowing one asset against one collateral, but it does it like perfectly. The protocol is like a fully permissionless, governance minimized, and super gas efficient. So the first thing is like, why did we build that? First, before Morpho Blue, we had like what we call Morpho optimizers that were like kind of like a peer-to-peer layer on top of Aave and Compound that were optimizing rates on those protocols. And so the value proposition of those protocols was like super clear for users. They had like the same experience, same risk parameters, but better rates. But over the 2 years, building on top of on Aave and Compound, we realized like building on top of an upgradable contract, we have like hundreds of risk parameters that can be updated daily, that can be paused, etc., is like very annoying and risky. So at some point, like we realized that we should build like our own independent lending protocol, like the one that we would have like liked to integrate when we were building Morpho optimizers. So that's why we're designing Morpho Blue. And we shipped it in a way that was like kind of fixing like all the flaws that we have noticed while building on top of Aave and Compound. And so one thing that was something we realized is like Aave or Compound is like thousands of lines of code, like more than 5,000 I think, like for Compound, and like 7,000 for Aave, which is like huge when we see like the whole hack that are happening into the DeFi space. For comparison, like Morpho Blue is just like 600 lines of code. So it's like drastically, like we have drastically reduced the features to the very essence and the very core features that makes like a lending protocol usable. And so that's one thing, and also like it improves the gas efficiency also. Also, like creating a market is like you don't need to go through like the governance process that can be kind of cumbersome. Each market can be created permissionlessly. Like you don't need to ask anything, and you can select like any collateral, loan asset, any oracle that you want, and you can select also the collateral factor. And those markets are isolated. So you can like scale the number of markets to an infinite numbers without like increasing the overall risk of the protocol, which is totally different from like Aave or Compound, where it's a one size fits all model where every asset are pulled together in one lending venue, lending protocol, and like each even if you're like a USDC pure USDC lender, you are exposed to all the risky assets that are listed in the pool. And we can remind people about the CRV bad debt event. But like Aave and Compound, the way they work are closer to like a kind of an on-chain fund where like it can be post upgraded, you're exposed to all the assets. It's not trustless. And with Morpho, we have those isolated markets, and the risk management is not enshrined at the protocol level, but it's externalized to risk management layer, what we call like metamorpho vaults. And those metamorpho vaults are like vaults that are on top of the primitive and are created by risk creators such as like Block Analytica. And those risk curators can select on which market they want to deposit user funds. And so you can create many different vaults with many different risk profiles. Like some are like a very degen vaults, some are like a very risk averse vaults. And they are depositing liquidity into like a specific market. Some vaults the risk profile of the vault can overlap to the extent where the fund that are deposited into markets overlap. But you can scale, target a very different needs and user types. To recap, like Morpho takes Aave and separates it into two, like the lending and borrowing engine, Morpho Blue, and the risk management engine, Metamorpho. And because Morpho Blue does just one thing, it's super efficient and completely trustless. As I say, it's governance minimized and immutable. On top on that primitive, like anyone can create Aave-like experience with Metamorpho, or like any other product, like I don't know, fixed rate lending, fixed rate borrowing, those kind of things, and kind of like create product that are really targeting specific persona instead of like trying to do everything to the same protocol and like increasing the smart contract risk.
Super cool. Already starting to see the overlap.
If I could jump in here and piggyback on the excellent description from Merlin, I think there's a few factors that really made Morpho Blue compelling to us in the Moonwell community. First of all, the fact that it is permissionless and governance minimized means that these markets that are created by anyone will live as long as Ethereum does. So they'll live forever, right? So you don't have the uncertainty that an actively managed DeFi system might have, where you might, for example, if the team goes away and is no longer operating it, you might end up in a very risky situation, right? Whereas Morpho Blue will just continue to operate forever, as long as Ethereum does, and the world computer will operate forever. So, depositors have certainty that like these markets will always exist. And then the governance minimized part is really important, because if anyone has ever tried to build a application that composes on top of other DeFi protocols, which is very popular in this space, if you build on a protocol like Aave or Compound or even Moonwell, the challenge there is that there's active governance and risk management is all done through governance. And what that implies is that you're kind of like building a house on sand, right? And all of the risk parameters might change underneath your protocol without you understanding what's going to happen, or break your protocol in some unknown way in the future. And so it's really dangerous and risky to build products on top of other protocols that have like a really active governance and that is constantly changing. And so if you look at the way the Metamorpho system is designed, the vaults are actually really compelling to the Moonwell community, because it's a very easy experience. We're all about bringing simple on-chain finance tools to everyone. And for a Metamorpho vault, all you have to do is supply ETH or USDC, So it's a single-sided supply. You don't even have to think about, okay, which markets is this going to go into? How do I minimize the risk? You just get paid borrowing interest for your vault deposits. And then a risk manager like Block Analytica, actually with their expertise, they decide which markets to supply your borrowable funds into. And so that way it kind of provides this really simple user experience where you can just simply supply and borrow directly from the Moonwell, or supply and withdraw directly from the Moonwell app. And we've created this nice mobile experience where you can do it without paying gas if you're using the Coinbase smart wallet. You can even supply ETH directly from Coinbase if it's in your Coinbase account using Magic Spend. And so you can just have this really nice, easy to use experience where you can simply supply your ETH or USDC. And then a risk curator like Block Analytica, with all of their deep expertise, gets to actively manage the supply caps for each of the Morpho markets that it goes into. And so that's also really compelling because they're doing all the heavy work of making sure that they're supplying a safe amount. And so Morpho actually makes this more flexible than some other attempts at isolated lending in the past. Isolated markets are really compelling from a security and safety standpoint, but they're also limiting because you have to supply the borrowable asset into each one of them. And that was always a struggle because you have to decide, okay, I'm going to supply into ETH USDC, or I'm going to supply into staked ETH USDC, and you would have to fragment your borrowable liquidity. And so early isolated markets were super complex and just hard for people to figure out. But with Morpho having this feature called the public allocator that allows liquidity to be dynamically reallocated up to the supply cap the risk curator has set between multiple markets, this actually allows Morpho to have the security and safety of isolated lending markets, but the flexibility of a more shared lending protocol like Aave or Compound. And so that was really compelling to us because it allows your borrowable liquidity to be more capital efficient and to earn higher rates of return than if it was just supplied in a market where it's not being actively utilized.
Cool. Yeah. I know because I'm using it. Okay. I want to talk now about risk. As the risk curator for Moonwell's flagship USDC and ETH vaults, what are the key considerations that Block Analytica is taking into account when curating risk for Metamorpho vaults and for Morpho Blue markets?
Yeah, I can dig into this a little bit. So there's some sort of like standard key factors that we look into when we're doing risk management for any sort of like lending or stablecoin project. So the details of the collateral that are being accepted, the overall market liquidity, and then the liquidity specifically on whatever chain the protocol is active on, so Base in this case. General security and safety properties of the collateral, volatility, stuff of that nature. All in all, basically just helping us figure out what's the likelihood that some of these loans end up losing money and what would be, kind of the magnitude of the loss if that did happen. And we want to optimize for the best possible outcomes, the best possible return while minimizing that risk of users losing money. It is a bit different managing risk on kind of in the Morphos paradigm, though. So one example of how this is different is Morpho offers currently just basically a set of fixed tiers of loan to value ratio that you can choose from when you're deploying a pool for a collateral asset. The idea there is by having a limited number of LTV tiers, it reduces liquidity fragmentation, so it offers like a better experience for suppliers, vault managers, curators, and also for borrowers. So when we're deciding which collaterals to choose and what parameters we want to accept, we align with one of those different tiers that are available. It does offer, in our opinion, it offers plenty of flexibility, but it includes just a little bit more of a constraint there. Morpho also is interesting that it doesn't natively rehypothecate collaterals, although this this can be added. Basically, as you know, as a curator, you can add that feature via some sort of footwork if you want. But because it's not natively, you know, all assets are being lent out to all other assets. It has, in some senses, some advantage. So for a market like Compound, generally you can never allow an asset to reach 100% of its TVL being borrowed, because this can block liquidations from happening. While for Morpho pools, in some cases, it can be acceptable for the pool to temporarily be at that 100% utilization if it's delivering, you know, a better risk return and sort of strategic advantages overall. So there's some interesting flexibility there that you get from not natively rehypothecating the collaterals. And each pool's totally independent, as was mentioned earlier. So you have the flexibility of splitting your allocations across different pools that are kind of at different points on the risk return spectrum. In some cases, you know, you could add a bit of the vault's assets to a higher risk pool that's paying out a higher return, while keeping most of it allocated to kind of more of the safer bread and butter pools. So it offers really interesting sort of optimization space for getting the best risk return profile and diversification overall.
Cool. I want to talk about growth of each of your guys' projects, which interestingly plays into one another, right? You can't grow without risk curation. You can't grow without places building on top of you. I think it's cool to see how we all work together towards the same goals of just mass adoption, right? So I'll start with Merlin again. Morpho Blue's seen massive growth, right? You have 2 billion deposited in only 6 months on ETH mainnet, I think, which is absolutely crazy. And then over 100 million deposited in just a month on Base. Why, right? What do you think are the main factors
Yeah,
driving
that's a good question.
adoption?
Yeah. First, I want to come back to Monetsupply, like talking about like the risk parameters and I mean the governance. I say like it was the protocol was governance minimized. The governance DAO can do some stuff like that are quite limited. It's like extending the range of risk parameters that can be chosen for markets. So if there's like a need for like a specific collateral factor that is not enabled yet, the DAO can like vote on it and enable it. Same for the interest rate model. And yeah, but once a market has been created, as Luke said previously, like the DAO can't change the risk parameters, so it's like a fully immutable, like it will live forever, and there won't be like a governance or rug that can happen on that market. So I just wanted to clarify that. And for coming back to the growth question, so I think like most people have are understanding that the current pool model that I've like described earlier is quite limited and quite risky. I talk about like the smart contract risk with like thousands of lines of code, multiple bugs, etc. And like the security, the risk from like a market risk of being exposed to dozens of assets, hundreds of risk parameters that must be updated daily and voted through governance with token holder that have not really no idea of like risk management and like how to manage funds on chain. And so I think like this is a key driver, like people migrating from like Aave or Compound protocols to Morpho. So that's one thing. also from like the permissionless aspect that we also discussed earlier. You can like list any asset without having like the governance overhead, and you can create a market without like increasing the overall risk of the protocol, which allows you to create many market for LSTs, LRTs, real-world assets that are not possible on Aave, or like if you want to have the same on Aave, you need to deploy like a completely new instance to isolate the risk. On Morpho Blue, it's like it's fine. Like you can create the market, the primitive layer, and you can like create a vault that is like depositing liquidity into those maybe riskier markets, but the risk is thus isolated. And also, like we have like many key partners that with which we've built like a very close relationship over time, like while building optimizers that have follow us and transition like liquidity over time. And we have like plenty of like new partners as well, like Moonwell. We are super happy to work with them. They have been like routing some part of like their users to Metamorpho Vault, like managed by created by Block Analytica. And due to the permissionless immutable aspect, Morpho Blue is enabling like plenty of new use cases for real world assets, as I say, LRTs and those kind of things. So that's that explains like a huge part the growth we've noticed over the last 6 months.
Cool. I want to quickly ask Monetsupply, what is your take, I guess, on the role of risk curation in protocol growth over time? As you know, Morpho is popping off, so to speak, among others. What is Block Analytica's role in that? How important is it? And then also, like how far does Block Analytica's services span? What markets do you currently supply into?
Yeah, that's a really good question. I think, a lot of people when they think of risk management, they just think, okay, this is the person who's paid to just say no, kind of over again, and like that's all that we do is, find reasons that we might say no to adding a collateral or pitching some sort of integration or XYZ, and that is, I think that's part of the value of a risk specialist, but it's in many cases equally as important to figure out how to get to yes, and figure out what risks are worth taking. So one example, separate from our work with Moonwell so far, but we also are contributing kind of risk services to big positions on Morpho on mainnet that are backed by Athena's USDE collateral. And in some sense, there's a pretty substantial amount of risk, like tail risks that are involved in that. But, we've done a lot of underwriting work on it and come to the conclusion that basically with the right safeguards in place, it's worth it. So I think that that's an important factor for, how we as Block Analytica and how risk providers in general contribute to growth is, for those higher risk opportunities, figuring out what is the threshold where they're worth it or not, and then trying to size them correctly. So that's something that we also consider with our work at Moonwell. So far that we've been curating these two flagship vaults, the USDC and the ETH vault. They've stuck mainly to I would say like the blue chips of collateral, assets that any user coming to base is going to feel 100% comfortable with. And I think, strategically that makes a lot of sense as like an initial offering. But it's also really exciting to think of what are, stuff that's a little more exotic, that could be really, valuable for users, grow the Moonwell ecosystem, grow the base ecosystem, and what are kind of the opportunities to get to yes on some of those interesting opportunities.
Yeah, I like that framework of how to get to yes on opportunities. Obviously, so much of progress is tied up in the what ifs. So I think this restoration as an important factor in growth is an interesting sort of background to growth as we're discussing it. Welcoming Jesse Pollak as well from Base. Jesse, welcome. I'll let you give like a quick intro. We're joined here, right, with Morpho Blue, Moonwell, Block Analytica, and now Base as well. We're talking about growth right now. I know Base has ambitious goals, right? 1 billion users, 1 million builders, and $1 trillion on chain. After you give us a quick intro, I'd be curious for you to break down Base's strategy for onboarding each of those groups individually. We hear about the users a lot, but what about the builders and what about the dollars as well?
Yeah. Well, hey, everybody. Thanks for having me. I'm super excited to be here. From the beginning, Moonwell has been one of the most kind of based builders. So really fun to get to be here and talk and also be with Morpho, who's been incredible just in the last few months. My name's Jesse. I created Base. I, prior to that, spent 5.5 years leading all the consumer products at Coinbase on the engineering side. So I joined as an engineer and then spent 5 years building Coinbase, Coinbase Pro, Coinbase Wallet, and all the teams behind them. And Base really was kind of the next phase of my journey at Coinbase, trying to figure out how do we take all those learnings about what it takes to build great consumer products and figure out how to apply them to this new on-chain world that we're starting to build. So it took about a year of wandering the desert to figure out what Base actually was going to be. And then it's been about a year. We're coming up on the 1-year anniversary of Base on August 9th. And heading to Basecamp this week to get to do a little celebration with about 400 of the most Base builders. So in that year, like you said, we've obviously set out a really ambitious mission and vision, and I think we've started to make really good progress on that. If you look at Base today from a activity perspective, users, builders, even DEX volume, I think we've become the market leader in the Ethereum L2 space. That's been really exciting to see in just a little bit less than a year. But like I say to the team all the time, it's still day one. And to get to that vision of the entire world on chain, millions of builders, billions of people, trillions of dollars of value, we're going to need to do a lot of work. And when we think about that work, we really think about it happening in 4 parts that roughly align to those metrics as well. And I'll just walk through them. And these are the 4 parts of the strategy. And everything we do ladders up to one of these. So the first part is building an incredible app platform that makes it really easy for builders to build. So this is about how do we make it so when people want to use Base block space, it's dead simple. And we've been doing a ton of things there, ranging from tooling to make it so anyone can get access to an RPC. You can have great developer tooling across the board. Base now has the best developer tooling of any L2 ecosystem from a compatibility perspective. And then, a ton of other things, including connecting builders and supporting them and giving them resources and funding. And so we believe that building that platform to make it easy and rewarding for developers to build is the most kind of foundation of this strategy, because that is what then enables the second part of the strategy, which is creating a vibrant app ecosystem that gives everyone a reason to go on chain. And so if those builders are successful in building on Base, what they create are apps, kind of like the apps in the App Store from Apple, except for these apps run on an open, decentralized platform that anyone anywhere can access, and that isn't controlled by a single company. And we are doing everything we can to make it so those apps grow very quickly. They get distribution and they're easy to discover. And so with things like the Onchain Content Network, which we just launched last week, when you build an app or a piece of media or a game on Base, that's now going to get distribution to sites that reach 30 million page views every month. That's just one of the ways we are working to take those incredible apps that builders build and put them in front of everyday people so that they actually have a reason to be on chain. And I always go back to the Paul Graham quote, YC quote on this one, which is like, make something people want. And if folks make something people want on this platform, we are going to make sure that the people find it so they can actually use it and they can grow. So that's the second part of the strategy. The third part of the strategy is, okay, now we have that platform. On the platform, the developers build apps. The people are coming in, they're using the apps. And then with those apps, folks are starting to bring their capital, their liquidity into the market. That is a market operating and starting to emerge on Base. And the strategic pillar here is we want to build a deep capital market that makes Base the center of the on-chain economy. And so today there's about $7.5 billion on Base. About 1.75 billion of that is actively kind of participating in protocols on Base, making it one of the kind of largest financial ecosystems in crypto. And we're doing a ton of work to make it so that more capital can flow in. We can get deeper liquidity so that both institutions and individuals can get best execution on Base. And I think we're starting to see this now actually really show up in the results. So if you look at kind of like overall DEX trading volume, over the last few days, we've seen that Base has started to have some of the most liquid pools across all EVM chains. So the USDC ETH pool is starting to be the most liquid, most traded pool across all VMs. And I think what that's starting to show is that there's going to be no better place to live your financial life than on Base, because it is going to be that incredibly deep economy. So that's the third part of the strategy. And then the fourth part of the strategy is the only way we can do all those things, build the incredible app platform for developers, build a rich app ecosystem for everyday people, curate and kind of create that deep capital market, is if it happens on a decentralized and scalable platform. Because if the platform isn't decentralized and it isn't scalable, it's not going to be accessible to everyone in the world, and they're not going to be able to pay for it. And so scaling and decentralization are kind of at the foundation of every single thing that we do. Today, we're actually really excited to cross a new milestone, which is we're raising the Base gas target to 10 megagas per second, which is a 4x throughput increase from where we were just a couple months ago. And it is 1/100th of the way to our goal of 1 gigagas. So that's a huge, exciting milestone today. We're also excited to share that we just brought fault proofs live on testnet. And we're working towards a mainnet launch of fault proofs in the next few months, which will make Base a stage 1 rollup by the end of the year. And so growing to a gigagas, proceeding to a stage 2 rollup, that's going to make sure that the platform that builders are building on, that everyday people are using the apps on, that folks are bringing their capital into to create that deep capital market, remains a place that is accessible to everyone. So that's the overview of the strategy. I know that was a little long-winded, but I wanted to kind of give the full play-by-play so folks could think through it.
No, that's really helpful. I like how the practical applications of the strategy are tied to actually why the ethos behind it, the ethos behind decentralization, and then why decentralization actually matters, especially with that credible neutrality stuff. Okay, cool. I want to follow up on that quickly with Coinbase's new smart wallet. I know that Base, alongside Moonwell, your guys' great goals are to make DeFi more accessible. This is a really good example. Jesse, will you just dive into really quickly how that smart wallet lower the barrier for on-chain adopters?
Yeah, absolutely. And the smart wallet really, just to kind of tie it back to the strategy, it really sits at the intersection of making that incredibly easy to use builder platform and making the incredibly kind of like rich app ecosystem. Because what the smart wallet does is it takes what was previously a huge amount of complexity for developers around, helping users get set up with wallets, doing on-ramping, managing transactions and gas, and reduces it to, one-line SDK integration. And then on the user side, it takes what was previously, a many minute or hour setup of setting up your seed phrase, funding your wallet, remembering where to store it and save it, managing all that complexity, and boils it down to something that can be done in 10 seconds or less than 10 seconds. And so with the new smart wallet, any developer can leverage it, and Moonwell and Morpho have been kind of leaders in doing that. You can integrate it by upgrading your Rainbow Kit version or your Privy version or your Dynamic version. They all support it out of the box. So you just bump your version. And when you bump the version, what you'll get is you'll get a one-click option that lets users on-ramp to your app in less than 10 seconds. On the user side, what that actually looks like is when they get to your app, they'll click create a new wallet, or they'll click sign in with this new wallet. They'll put in their fingerprint, which will create a new passkey signer that's going to be stored in whatever backup method they want. And then that passkey signer is going to be attached to a new smart wallet, which is a 4337 compatible smart wallet. That's basically like a super powered crypto wallet that can do all sorts of things. And then they'll be dropped immediately back into your app where they can transact. Now, a few things that the smart wallet enables that are totally new. The first is that now, because it's a smart wallet, we can abstract all the gas complexity from users. So they don't have to have gas. They don't have to think about gas. They don't have to use gas. Now apps can pay for that. And for any app that integrates the smart wallet, we're actually giving $15,000 of free gas credits, which on base at the current transaction prices ends up translating to millions and millions of transactions. And that means that when your users try and get started using your app, they can just do the thing they want to do. They don't need to fund it. They can just transact. So that's the first big thing. We also have tools to set up, really powerful gas policies, so you can subsidize based on certain attributes that the wallet has, or NFTs or verifications. You can only subsidize certain things. You can subsidize certain amounts, and so all of that is tooling that lets you abstract gas complexity from users. The second thing that the smart wallet does, which is really magical, is it lets you batch transactions. So for lending protocols, this is a particularly painful history that has a great solution. Whereas previously, if you were using Moonwell and you wanted to lend USDC, that was actually 2 transaction approvals that a user would need to do. First, you have to approve USDC, and then you need to transfer the USDC into Moonwell to kind of get your position. Sometimes there's actually more steps than that if you're managing multiple markets. And for someone who's just trying to borrow against their assets, that level of complexity is way too much. So with a smart wallet, all of that can be compressed through a batch transaction into just one transaction. So you can say, hey, lend $100. And in one transaction, you can bundle all of the steps that the user needs to take and execute the transaction all fully atomically on chain. And then the user will have done whatever they want to do. And that's a really, really powerful building block for making much easier experiences, particularly when we can make those experiences gasless. So that's the second big thing that the smart wallet can do. And then the third thing, which actually relies on that transaction bundling, is the smart wallet can link to any Coinbase account. Any Coinbase account. User just connects their Coinbase account, and then they can immediately spend their balance out of their Coinbase account. So they can take their Ethereum, they can take their USDC. There's going to be a lot more assets they're going to be able to take out of that. And in one click, they can act as if that Ethereum or other asset was already in their wallet and do the transaction. And so, for instance, for Moonwell, they could say, hey, I have a bunch of Ethereum sitting in my Coinbase account. I'm just going to put that into the Moonwell market and get USDC out. And all of that can be done in one transaction with no additional approvals, no additional complexity, no transferring, no copying wallet addresses and sending and waiting and making sure that you did it right. It just works. So we believe that those 3 things, gas abstraction, transaction bundling, and seamless access to off-chain assets, basically bring about a new era of crypto. And combined with the out-of-the-box security that the wallet brings and the massive ease of use for signing up, we think that we're really entering the next era where people are going to be able to onboard in less than 10 seconds and start to use these incredible apps that are starting to emerge on chain.
If I could piggyback on that a little bit, Jesse. First, thanks for being here. It's great to have you. We have been, an early adopter of the smart wallet in the Moonwell community. We were a day one launch partner, and it's been phenomenal to see how easy it makes our app to use. All the things you mentioned. For example, we use a paymaster with the $15,000 base gas sponsorship, the base gasless campaign. So our users don't even have to pay for gas. They can use all the Moonwell contracts, including the Metamorpho vaults. They can supply and withdraw, and the Metamorpho markets from our app for free. So if you're a Morpho Blue user, try our app because you can use those markets for free, and it just saves the users the hassle of acquiring ETH to use our app in the first place. And then, the bundler, which is that feature you were talking about that lets you batch transactions. is also really a great user experience because it means that, previously it was actually like 3 transactions. If you wanted to borrow against your digital assets, you had to first approve, and then you had to supply it to the market, and then you had to enable collateral. And we were able to bundle all 3 of those things into just a single supply. So when you want to just supply USDC, it's 1 transaction now. And so all of those little like friction and pain points that users experience when you're using on-chain finance for the first time are able to kind of be abstracted away from users now. I no longer need to back up a seed phrase. I can use it on my mobile device without having to use a computer. I don't have to acquire ETH. And for many users that are just coming from Coinbase for the first time, they may have used the exchange, but they've never used on-chain finance before. There's a comfort level with like leaving your assets on a trusted exchange like Coinbase. It's the most trusted exchange, right? Whereas previously we've told users, okay, you have to withdraw your USDC to your wallet. So copy and paste in your wallet address, and if you mess it up, you're going to lose all your funds, right? So all of that sort of scary overhead that like, if you're helping a family member or a relative or a friend use crypto for the first time, all of that kind of goes away. And that's really what's necessary to kind of grow our community from the few hundred thousands of users we have today in on-chain finance to like millions and eventually a billion plus users. We have to make it as easy to use as like a Web2 app. And I feel like the smart wallet is a big part of that. And that's why we're really leaning into it on the Moonwell community, because it aligns with our mission to bring the most powerful on-chain finance tools to everyone in the world, regardless of ability level. And so that's been really key for us. And also, I think the thing I've been thinking about a lot is what's going to grow this on-chain economy to $1 trillion. I think I start to see the seeds of that, and it's probably going to be payments. And the reason I think it's going to be payments is because I saw this recent Stripe partnership with Coinbase. And so what Stripe does is they offer, payments APIs to millions of e-commerce website developers worldwide. And you can easily build the Stripe API into your website, and you can accept credit card payments. But the problem with that is that everyone pays like a 3% merchant fee to use Visa, MasterCard, American Express, and all these credit cards. Well, with Stripe partnering with Coinbase, that means now they can settle payments on Base for less than a penny per transaction. And all of those payments processors over the next, 5 to 10 years are going to be migrating to using USDC to settle payments on Base, which means they can cut that 3% transaction fee down to pennies. Maybe they'll charge 25 cents to end users, but it'll still be a massive savings. And then for a retail user that just wants to shop online, they can keep USDC in a Coinbase account, earning 5+% on their USDC, and they'll be able to just simply use the Coinbase app to make payments, and they'll be offered a discount from merchants to make those payments. And then what's really exciting for Morpho Blue, to kind of tie it back and to the Moonwell community, is that those payment processors, they won't want to just let their USDC sit in a wallet somewhere. They'll want to lend it out in a money market so they can also earn a return while the payments are being settled on the back end. Or when they require the payments maybe set idle for a little while before they pay out the merchant, right, to make sure there's no chargebacks or anything. So they'll be able to generate returns by using the deep liquidity pool and supplying into Metamorpho vaults on Base. And so that kind of like brings it full circle to how Base is going to grow to this massive on-chain economy. Imagine if all the e-commerce volume in the world, or even a fraction of it, was being settled on Base for pennies versus 3%. And that's also how Base and all the entire ecosystem, Stripe and everyone, is going to disrupt these entrenched oligopoly of credit card companies that basically charge a 3% tax on everything you buy every day. So I just wanted to kind of give my thoughts there.
Yeah, I love it. And
Yeah.
I totally agree. I mean, one of the most consistent, fastest growing use cases on Base, and I think across the on-chain economy, is payments and stable coins. And I think that's just going to grow. And so we have a lot of stuff we're cooking up to make that happen. EURC just got announced on Base, and that's going to be launching very soon. So that will give Euro stablecoin, which is the second largest currency in the world, I think the third largest currency in the world. And then one of the things that's really important to us is expanding stablecoin coverage. So our North Star is we want to have a stablecoin for every single country, because we think that that's going to give folks a much more intuitive on-ramp into the new on-chain economy. It's going to make more efficient FX markets, and it's going to make the world a much better place. So yeah, it's all coming together.
Yeah, just wanted to add like a little thing um, I agree with everything that you said, and I think it would also offload having a smart wallet available and very easy to set up for users, very important, because right now, to abstract the complexity of like batching transactions, etc., we have like built what we call the bundler contract, which is kind of a layer on top of Morpho, but it's kind of like something that every protocols must do if they want to provide like a very good UX to their users, and it's something that is not core to the skill set of the team, or is not core of the protocol. It's like just a layer to improve the UX, and like the smart wallet can offer that out of the box with like even more better UX, because like you could batch also like a swap or something like that, which is not related to that lending protocol. So we're very happy to integrate those kind of solutions, and we deeply think that it will allow more retail users to come on chain and use lending primitives and other DeFi primitives in general.
Great. As we're talking about growth, I like that we're bringing in sustainable growth, right? Growth that includes accessibility to people that don't even have a wallet right now. So as we wrap up here, I'll just give everyone a chance to give you maybe your closing thoughts on the space, any upcoming features, events, maybe milestones coming up. Jesse, I'll start with you because I think you might have to run pretty soon. Then we'll hit the rest of the group.
Yeah, I mean, I gave a talk on this that I posted on Twitter on Friday, but I really think that right now is the moment where we start to break out in terms of overall global on-chain adoption. And the message I've given to our team is that it's time to push into like zone 5, which is the heart rate zone that we like to use to talk about work rate zones. But really like the feeling that if we push hard right now for the next month or so, there is an opportunity for us to really change the trajectory of crypto adoption. And so that's what we're doing. That's coming together with Basecamp, which is happening tomorrow and Thursday in the mountains of Idlewild, celebrating the 1-year anniversary of Base's launch with I think about 370, 400 of the kind of like most core base builders. And so I know Luke's going to be there. I think some folks from the Morpho team are going to be there, and so many others. And we're super excited about that. Just getting to bring together the folks who've been integral from the beginning, and who I think are going to be the catalyst that kicks us into the next phase. And if you aren't able to make Basecamp, good news, we're going to be streaming all of it. So on Thursday from 10 a.m. to 1 p.m. Pacific time, we'll have talks from me, Brian Armstrong, Vitalik Buterin, a bunch of folks from Coinbase, a bunch of folks from the broader ecosystem, talking about how we're all bringing the world on chain. So excited to see you there.
Sweet. Maybe I'll pass to Merlin.
Yeah, sure. So for the next thing, first, we've recently deployed on Base, so we are super excited about that. We are definitely we want to grow it. We deeply think that it might surpass quite fast even the Ethereum instance that we have right now with 1.7 billion of deposited assets. The reason why is having a cheaper transactions offer a much more integration type where you can have a fintech, more retail users, those kind of things that can now come on chain and use DeFi protocols. Also with Base is a big bet for us. It's the first L2 that we've deployed on, and why we deployed on this chain first is because we've been impressed by the organic growth that Justin was talking about in just 1 year, and we've kind of admire the impressive community of builders, and we think also that somehow like the Coinbase brand has like a huge impact on it, and like a kind of like a reinsure and attract more institutional retail users through like fintech integrations. And we deeply think that this is the way we'll scale DeFi, and like kind of like and that self-centered cycle we are in, where like only DeFi protocols are only like talking to other DeFi protocols, and we want to break that loop and go to the outside world and like build like a reward applications and find and enable those use case. So we are very bullish on like that base deployments, on that Moonwell with that Moonwell integration. They've been like they have done a lot of work on like improving the UX for their users, which has been awesome. And we think that this is the way forward. So, and also like final things, like we're quite bullish on like base reaching stage 1 of L2 soon. And as I heard, like Jesse, you said that it was in staging right now. So yeah, we'll be glad to have that in production very soon.
Very cool. Monetsupply, and then Luke, wrap us up.
Yeah, I guess I'll keep my bit short here. I would echo just that I'm, super excited for the final sort of point where we're able to integrate all of this DeFi infrastructure that we've been building with and farming with over the past few years into real world use cases, smart wallets, payments for goods and services, foreign exchange, everything that we kind of know has been like the eventual use case for DeFi, but there's been like just kind of friction that's prevented us from getting there. I think we are very close, and at Block Analytica, we have to be sort of focused, because risk management isn't infinitely scalable. You need to kind of have hands-on work and attention to maintain quality with each project that you're working on. But we're just extremely excited to be working on base with Moonwell and Morpho. We think that they really have the opportunity to seize the moment as DeFi finally sort of achieves like real world use cases. So just very excited for everything that's kind of coming down the pipes here.
Thanks, Monetsupply. Jesse, I'm super excited to go to Basecamp. It'll actually be the first conference anyone from Moonwell has gone to all year, simply because we've been so busy building. So I definitely appreciate, we've been in Zone 5 for about the last year since Base launched, and it's been really exciting and exhilarating to be in that zone. But just to talk about what's coming up in the near future for us, obviously we're going to continue improving the product and making it better, with our North Star being making the easiest to use on-chain finance tools for everyone. And we just recently expanded to optimism. So we're going to continue to kind of lean into this idea of chain abstraction. So you probably saw this if you're familiar with our app. You saw this land earlier this year, USDC Anywhere, where you can now lend and borrow USDC across all the Ethereum networks and across the superchain. Later this year, Optimism is launching interoperability, which means that digital assets and other NFTs and other assets can freely flow between all of the L2s in the superchain, including Base, including Optimism, Zora, Mode, all of them, and any future superchain networks that come online. And we really think that this is the future of on-chain economies and on-chain finance, because if you remember the early days of the internet, we didn't used to be interconnected. It wasn't a network of networks. It was like isolated networks, maybe your university, or maybe at your office you had like a LAN. But we strongly believe that chain abstraction is the way we can onboard millions of users, because we won't be able to scale without scaling the superchain itself. And so we want that to kind of fade into the background. And even today, where you can transfer USDC between a network in a few minutes, between Optimism and Base, for example, we think that eventually the outcome is that you won't even have to think about what network your USDC is on. You'll just be able to spend it in an app anywhere on the superchain. And so we're going to kind of lean into chain abstraction and do some deep research and come up with a better solution for people together with optimism, together with Base. We're all kind of building this future together, because for end users, ultimately, you shouldn't have to think about what network you're on when you want to use an app. It should just be like the internet, right? You don't have to worry about if your friend is on Verizon and you're on AT&T. You can still like text them and send WhatsApp messages and stuff. So we just feel like this is the future of apps, and we want to lean into chain abstraction and provide the best user experience for everyone in the world. Thanks for having us, Cool Horse Girl. This was awesome.
Yeah, thanks for having us. This was awesome. So excited to keep building with all of y'all. See you at Basecamp.
See you there.
It was really my pleasure, guys. I appreciate all of your time today. This was, I think, my favorite episode of Moonwell Radio thus far. We'll have to do something similar in the future. Well, I can picture it like a year from now, developments and looking back on this. So, yeah, thanks again for your time, guys. We'll see you soon. And in our audience, keep up to date on Morpho, Blue, Block Analytica, Base, and Moonwell. Big things coming. Bye, guys.